How to maximize profits trading Russell 2000 in 2016, part 1. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders. Our website is www.stochastic-magdi.com. The title of this video is how to maximize profit trading Russell 2000 in 2016, part 1. Alright? First thing first, what is the long-term market pattern? Okay? Now, the long-term market pattern for Russell 2000 is a rising channel, but the price has violated the market pattern. So, the previous market pattern was a rising channel, which is here represented by the pitchfork tool. You can see that the pitchfork tool allows traders and investors to forecast, the possible routes or possible path that the price is likely to take. So you can see here we need only 3 points to determine, if there is a trend where the price is likely to go, all right? So that with this 3.1 to 3, they allow us to draw the pitchfork tool, and the pitchfork tool is telling us that the price has a high chance to stay within the boundary of the Andrews pitchfork tool, all right? So now we can see that this was the long-term market pattern, all right? Now the price is out of the pitchfork tool. What we need to do now is to project the width, the width of our pitchfork tool in the direction of the price. This is the projection. By projecting our pitchfork tool in the direction of the price, we have a new channel between the brown line here, follow my cursor, and this blue line here. And this middle blue line is the median line of our projected channel. So we have a new channel between this point, and the median line is this line here. All right, so this is it. So the market pattern, long-term market pattern, was bullish, but that market pattern has changed. Now we have, the price has violated the pitchfork tool. Now we see that the medium-term market pattern is a consolidation. So long-term market pattern was bullish because the price is out of that channel, so we have to say was bullish. So it's no more bullish, but the current market pattern, is a consolidation between the orange line and the green line here. So you can see that the price is oscillating, somewhere since 2013. The price is 90% of the price action is stuck between the orange line and the green line. So the long-term market pattern was bullish. The current market pattern is a consolidation between the level of 1186 and the level of 1078, the orange line and the green line. So there is a current market pattern, is a corrective market pattern, is a balanced market pattern, is a consolidation market pattern between the level of 1186 and the level of between the level of 1186 and the level of 1078, so the orange line and the gray line. So but if you look carefully, the price is again out of that current market pattern. So the current market pattern, a consolidation between the orange line and the green line. Now the price is out of that market pattern again. All right, a lot of change is happening here. So from the rising channel, we have a horizontal channel between the orange line and the green line. Now the price is out of this channel again. What do we need to do? We need to project the channel in the direction of the price. Here it is. The projection of our channel, this channel here, we project it down in the direction of the price because the price is out of that channel, bringing us to this level here, where I'll color it now into pink to get your attention. Pay attention to the pink line on my chart. That's the projection of our horizontal channel. So first, long-term market pattern was a rising channel. Then we see that the market pattern was horizontal channel. What is it telling us? It's telling us that though we have a bullish trend in place, okay, that bullish trend was slowing down. That's why we have a consolidation. Now, what's happening now? We have again the prices out of that horizontal channel. So we have a new channel here, which is bringing us to the edge of the projection of the pitchfork tool. So first, remember what I have done so far. I have projected the horizontal channel between the orange line and the green line down, bringing us to the pink line. Yes or no? Pay attention. Okay. Then we have also projected the pitchfork tool. You see the size of the pitchfork tool, because the price is out of the rising channel. We project it down, bringing us here. Look. This is a hot spot trading zone, the intersection point between the pitchfork tool or the projection of the pitchfork tool and horizontal support or resistance line is a hot spot trading zone. Did you get that? Go to Day Pro Traders YouTube channel, subscribe to them, and watch the video about tips and tricks how to use the pitchfork tool to identify hot spot trading zone. The intersection point between the pitchfork tool and any horizontal support and resistance level is a hot spot trading zone. Okay, so here we have the projection of our horizontal channel bringing us here. We have the pink line. That pink line is a very important key level. The intersection point between the projection of our pitchfork tool, here it is. This zone is a hot spot trading zone. This zone was a hot spot trading zone. We knew that before the price came here, okay? So by using the pitchfork tool to determine a hot spot trading zone, one can forecast, possible, a reversal point. So we knew already that this was a hot spot trading zone. Now we know that this is a hot spot trading zone. This is also a hot spot trading zone because we have intersection between the projection of the pitchfork tool and the pink line. This is a hot spot trading zone. Okay, this was a hot spot trading zone. All right, this is. I move one line. I don't want to move my lines. I need to adjust my line. Hold on, please. All right, you get a message. All right, so we are now at a hot spot trading zone right here. Intersection point between the projection of the pitchfork tool and the turquoise line right here. Okay. So there is a high chance, talking about how to maximize profit, trading to Russell 2000. There is a high chance because we have a hot spot trading zone. So we will implement a top-down trading method from the hot spot trading zone. If we receive a signal here, we will take it, and we will expect the price to go up, probably to retest the edge of the median line of our new channel. Our new channel is what? Between this brown line and the blue line here. And the median line is what? This line here. So we'll expect the price to continue to go up and to retest this level. It does not have to do it, but there is a high chance that it may do that. If the price is going up from the level of 1008, the next level that we must watch is 11. Okay, now I need to correct that first. Bear with me. 1078, okay? Bear with me. 1078. All right, so you see here, so if the price start going up from where it is now, the next key level that we must watch is 1078. If it breaks above 1078 and finds support, there's a high chance that we go up to the level of 1186. We are now at a hot spot trading zone right here. All right, it makes sense? If you look carefully at the price, the structure of the price came down 1, 2, 3. Now we are at a hot spot trading zone. One must use what? a top-down trading method. We are on a monthly chart, daily chart, hourly chart. The signal, we'll expect a clear-cut signal on a daily chart. All right, on a daily chart, okay? And we will use the hourly chart for the entry. We can zoom down to the 5-minute chart to pinpoint the best place to enter the swing trade. For day traders, one will look for a chart pattern on or near one of those key levels, all right? So far, what are we talking about? The long-term market pattern is a rising channel, was a rising channel. The price out of that channel, we had an horizontal market pattern between the orange line and the green line. Now the price out of that channel also, we project it down. Now we have a new channel, okay, right here. I'll go back to the weekly chart. Okay, we have a new channel. That's where between the green line and the pink line, and we are now at a hot spot trading zone. Okay, if the price finds support here near the level of 1008, the next key level that we must watch is 1078. If it breaks above it and finds resistance, finds support, break above, retest, turn around, the trading setup will be in place. We'll use again a top-down trading method here to take it to the edge of 1186. That remains to be seen. All right. The price can also come out of our new channel. So if it goes up a bit, all right. If it's going to go down, it must go up first. So if it breaks out of our new channel, we will expect it to come down near the level of 856. So where we are now, if we fail to find a support there and even come below the level of 969 and find a resistance, the next key level to watch is 856. All right, 856. All right, break below, retest, turn around. Okay, so if you come down at this, there's a high chance that it will try to go back up again to retest the edge of this trend line here. Okay, come down to 856, goes up to retest the edge of this trend line here, and if you find a resistance there, it may come down. Always, as the price retest in the hot spot trading zone, we do not assume anything. We use a top-down trading method. The old way of trading, when one will just sell and hope that the price will go down or go up, is no more valid. Okay, it's no more valid. Okay, the price can continue to go up. So if it goes down to 856, can go back inside the channel before coming down. Very, very important. Okay, so what we are doing here, we are just mapping out the Russell 2000 in order to determine the hot spot trading zone. Once we identify the hot spot trading zone, we just wait. If we recognize a valid trading setup on or near that hot spot trading zone, we'll use a top-down trading method to trade it. For those who are investors in the financial market trading in the Russell 2000, at this point in time, the strategy that one should adopt is a defensive strategy, because the previous trend was bullish, the price violated the previous market pattern. One should not, it must be crazy to buy and hold, hoping that the trend will continue. If one was buying the Russell 2000 before as an investor, one should secure gain or even a bank profit, or become very, very defensive, very, very defensive, because the previous market pattern is no more in place. The price is out of that channel. It's now on the edge of the projected channel right here. This is a hot spot trading zone. We will see whether it will continue to go up more. That remains to be seen. Another thing that will help the Russell 2000 is the negative interest rate in Japan. The Bank of Japan recently has put their interest rate into the negative territory, minus 0.1. All right. Same thing in the Eurozone. We have a negative interest rate, which means if you are a saver, you are saving money, you have to pay the bank, that's so that the bank may keep your money. Instead of earning interest, you are paying the bank. So when that is happening, we talked about that before, the outflow of capital, a lot of money came out of the Eurozone into the dollar. That's why we see that the dollar yen was going up last year, 2015. Dollar yen was going up because of the negative interest rate in the Eurozone, outflow of capital into the dollar. Now again, we see a negative interest rate in Japan. We will see where the money will go. The wealth managers will have to put the money where they can earn higher interest rates. Okay, it does not have to be in the dollar, but the first place that people would like to go is into the dollar. But remember, the only thing that will benefit the Russell 2000 is the negative interest rate in the Eurozone and also in Japan. All right, but as I explained to you already, as an investor, one should become very, very defensive at this point in time, secure gain, and wait carefully. Okay. I'm going to go now for day traders, okay? The market pattern will determine our trading strategy, okay? So at this point in time, as I explained to you, the current market pattern is a consolidation between the orange and the green, but the price out of that channel, we project it down. So current market pattern, medium-term market pattern, corrective market pattern, or consolidation market pattern, or a balanced market pattern, we see a new projection in place, okay? Traders, professional traders will look for opportunity to buy near the pink line here if the price finds support, and will be ready to take profit near the level of 1078. There are 6 specific key levels, 6 specific support and resistance level, influential support and resistance level, that those who are trading the Russell 2000 stock index must watch. The first key level, take note, please. Take note, all right? Take note if you trade or invest in the Russell 2000. The first key level is the high of 2015 at 1296. 1296. The Russell 2000 will become very, very bullish if, repeat, if the price breaks above the high of 2015 and validated, repeat, breaks above one condition, second condition, and validates the high of 2015 as a support level. Okay? All right? But I don't want to dwell on that because I don't want the video to be too long. All I can say to trade it very fast is that we have this scenario, market goes up, and then it slows down, and then we see a continuation. That's one scenario. All right? Sometimes the price goes up like this, A to B, then we see a consolidation or a pause, and then the price will break above it, only to find a resistance somewhere in the zone of 138.2% Fibonacci extension level before coming down again. Sometime, my friend, the price will go up from A to B, and then we see a pause, a consolidation or a correction, and then we see a reversal. We are at a point of, where the market is pausing now. As I show you, there are many scenarios that can take place at this point in time. Okay, so the price now at a hot spot trading zone. One will use a top-down trading method. If you receive a buy signal here, okay. Market pattern for trading, swing trading, day trading, allow us to buy near the pink line. As the price going up, we are watching the level 1008, 1078, and the level that are all above here, 1186 and 1296. Okay? If we find a resistance, the market will become very, very bearish. My friend, repeat, the market will become very, very bearish if the price, find a resistance, below the low of 2015, 1078. You find a resistance there, you become very, very bearish. All right, so that's why I said you can go inside before coming down. If you find a resistance below 1078, it can become very bearish because this year is 2016 and we have an election in the United States in 2016, very, very important year. First key level, high of 2015, 1296. Second key level, low of 2015, 1078. The median line of 2015 is at 1186. The median line of 2015 is the orange line here, as I show you here. That's the median line. It's not the exact median line. I always give traders the nearest number near the median line, so it's not the exact median line. Okay, so take it from me, 1186, all right, the median line of 2015, all right, the price was consolidating between the low of 2015, the market pattern that we see between the low of 2015 and the median line of 2015, all right. If the price stay below the median line of 2015, the bear will have the upper hand, all right. If it goes above the median line, the bull will have the upper hand, but it will become very bearish if the price and the resistance be below, all right, below the low of 2015. It makes sense? The fourth key level that trader must watch is the median line of 2013. Where is it? The median line of 2013 is the turquoise line here, 1008. That's the median line of 2013. Okay? The next key level that trader must watch is the high of 2000. Okay? The high of 2007 is a psychological price level. Why? Why the high of 2007 is a psychological price level? You know that the bearish season, okay, from 2007 2008, you see here, we have the high of 2007. That's where the bearish season began on the dot, boom, down, okay? Before the bullish cycle has started in 2009. 2007, the market has peaked, and then we have a bearish season in 2008. So the high of 2007 is in fact a psychological price level for that traders are watching, 856. So even if you are trading Dow Jones, after 10 years, if you are trading the Russell 2000, my correction, if you are trading Russell 2000 stock index after 10 years, you should not forget the high of 2007, 856. 856. The next key level that trader must watch is the median line of the V pattern. Which V pattern? A V for Victor, V chart pattern on the monthly chart. There is a V or round bottom, okay, chart pattern on the monthly chart. Here it is. All right. So the median line of this V chart pattern, all right, is this line here, 610. You want to remember that level. You can see that in 2011, the price retested that level. It's a very, very important level in 2007. So we have a round bottom, pull back near the 50% Fibonacci retracement level of the depth of the V pattern or the round bottom chart pattern. Are you with me? This is chart pattern analysis here, okay? V pattern, sometimes they may say round bottom chart pattern. The depth is from the low. I use a conservative measurement, okay, see here. I didn't go all the way to the tail. I just put it from here to here. That's enough for me, all right? And that's it, all right? We measure the 50% Fibonacci retracement level. That's the level of 610. So there are 6 levels. The high of 2015, 1296. The median line of 2015, 1186. The low of 2015, 1078. The median line of 2013, 1008. The high of 2007, the psychological price level, 856. And the median line of the V chart pattern on the monthly chart, 6, okay. In fact, it's 621, it's not 610. My apology to traders. The median line of, I move my line a bit, my apology to traders. The median line of the V pattern on the monthly chart is 621, 621. All right, 621, okay. So those are the 6, okay, key support and resistance level that traders who want to maximize their profit trading the Russell 2000 in 2016 must watch. So we want to pay attention to those 6 a key support and resistance level. We want to pay attention to the current market pattern, a consolidation, all right? The market pattern will determine our trading strategy, okay? For investment purposes, the market is slowing down now. It's not the best time, okay, to buy and hold, okay? But the price now at the hotspot trading zone. This is good for trading short-term to medium-term trading activities, all right? It makes sense? It is also powerful. I want to refresh your memory a bit. Last year, we recorded a video about Russell 2000 that we have posted at the George Trio YouTube channel. In that video, I measured the depth of this V pattern, and I was telling traders in 2015 to watch this level here, the projection of the depth of the V pattern, because if the price breaks above the neckline of the V pattern of an inverted head and shoulder chart pattern, of a round bottom chart pattern, we project the depth, okay, of that pattern to the upside. Look where the Russell 2000 change direction peak here, the only dot, okay? This is a target zone. Here we had what we call a convergent trading signal, because the bull that we're buying before will take profit here. How do I know? Because they use this measuring stick to set a target. So the price came to the target zone after breaking above the neckline. This is a hot spot trading zone. It is also what we call a convergent point. If you want to know more about convergent trading signal, go to www.stochastic-macd.com. So price reaches this level, we do not assume anything. We just wait patiently. We use a top-down trading method to trade it, because the bulls that are buying before will sell here. And the bear that do not want to buy will sell exactly here, because they know that the bull are likely, 70% of the bull are likely to take profit at this point. So both bulls and bear are selling together. The bullish traders are selling to close their bullish position. The bearish traders are selling to open bearish position, creating what we call a hot spot, a trading zone. One will use a top-down trading method to trade. So this is, at this point in time, once the trend line here is kaput, okay, we have a trading setup, and we will use a top-down trading method to trade it. If one is option trader, one will, use, a put option at this point in time to navigate through this messy market. It makes sense? It is also powerful. So in order to maximize profit trading Russell 2000, one must buy or sell the Russell 2000 around those 6 critical price levels. Okay, one will also pay attention to the current market pattern and buy or sell on the edge of the trend line. If a current market pattern has changed or the price has violated the current market pattern, we will project that current market pattern in the direction of the price. In around 15 to 20 of February 2016, between 15 to 20 of February 2016, I will be recording the second part of this series of video about how to maximize profit trading Russell 2000 in 2016, part 2. In part 2, I will be talking to traders about the specific equilibrium price level that they must watch throughout 2016. Around August to September 2016, talking about Russell 2000, how to maximize profits trading Russell 2000 2016, I will be recording the third video, which will be the last video in this series of video, to show traders how they can maximize their profit trading Russell 2000 in 2016. All right? So this is it. So what's the point, my friend? The point here is very clear. Professionals do not buy or sell in a void. Hedge fund, a big financial institution do not buy or sell in a void. This is one place they will be willing to buy. So if you receive a trading signal here at a hotspot trading zone, we will join them and buy. But we don't just buy. So if you are option trader, you can buy call option. Okay, that's it, call option. But because it's a hotspot trading zone, it's not too bad, okay? Hotspot trading zone, buy call option. All right? If you are a technical trader like myself, we use a top-down trading method. We are waiting for a trading setup. Okay, trading setup is in place. All right, we pause, we wait for the signal. Okay, signal is fired. We use a top-down trading method, go to the entry time frame to enter the trade. Okay, all right. We will pay attention to the economy news and the fundamentals. Okay, Google Finance, Yahoo Finance. If one is an investor, at this point in time, okay, if you have been making loads of money since 2009, do not be greedy, okay? Bank some profits, all right? Be defensive, all right? And wait until a new trend, okay, is in place, all right? But right now, we have a balanced market, a corrective market in place, all right? Until a new trend will begin, okay? We will see, all right? This is the end of this video, all right? We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about how to maximize the profit trading Russell 2000 in 2016, part 1. Speak to you soon.